Negotiating an international executive relocation package usually involves securing a generous set of corporate perks, including a luxury company-paid apartment in one of the most exclusive neighborhoods in the city you will move to, like Oslo or Stavanger. Walking out of the boardroom with a signed contract that guarantees your employer will cover your 50,000 kroner monthly rent feels like an absolute masterclass in corporate negotiation, because it essentially drops your personal living expenses to zero. That feeling of financial victory will abruptly shatter the moment you receive your first Norwegian payslip and discover that your actual take-home pay has been drastically slashed, leaving you with barely enough cash to cover your daily groceries. Welcome to Norway Perspectives. I am Erik Christensen from the NLS Norway Relocation Group, and today we are exposing the devastating fringe benefit tax trap known under Norwegian tax law as Naturalytelser, and why accepting a free company apartment could actually bankrupt your monthly cash flow. In many expatriate destinations, especially in the Middle East or parts of Asia, corporate housing allowances and company cars are standard tax-free perks designed to lure top global talent. Norway operates under a notoriously strict and aggressive egalitarian tax regime, where the Norwegian Tax Administration, known as Skatteetaten, operates by a very simple and unforgiving rule. If your employer provides you with anything of monetary value that saves you from spending your own private money, that value must be taxed exactly as if it were pure cash income. The financial trap triggers violently when foreign executives fail to account for Norway's high marginal income tax rates, which easily exceed 45% for top earners. If your company leases a beautiful waterfront apartment for you at a cost of 50,000 kroner per month, Skatteetaten automatically adds 600,000 kroner to your annual taxable gross income. Because you must personally pay the income tax on that massive benefit, the government will forcibly deduct an extra 20 to 25,000 kroner directly from your monthly cash salary, just to cover the tax bill for your free housing. You are essentially forced to pay for half of the luxury apartment out of your own pocket, while completely draining the liquid cash you need for investment savings and notoriously high Nordic cost of living. This aggressive taxation net does not stop at real estate. The Naturalytelser laws actively target almost every single executive perk you negotiated. If your company provides you with a firmabil or a company car, you are taxed heavily on the list price of the vehicle, regardless of how little you actually use it for personal driving. If your employer pays for your flights back to your home country to visit your extended family, if they cover the tuition for your children at an exclusive international school, or if they simply pay for your private premium health insurance, every single one of those perks is aggressively taxed as ordinary income. Furthermore, the Norwegian tax authorities rely on a highly automated digital reporting system known as avmelding, where your employer is legally obligated to report the exact value of every single fringe benefit you receive every single month. There is absolutely no room for creative accounting or hiding these perks off the books. If your employer fails to report the true market value of your housing or your company car, both you and the company will face severe punitive fines and back taxes accompanied by aggressive penalty interest rates. Many international human resource departments located outside of Norway simply do not understand these strict local compliance rules, and they routinely draft expatriate contracts that leaves the employee entirely exposed to the personal tax liability. When the inevitable tax audit occurs, the international parent company will often claim that it is the employee's personal responsibility to settle their own Norwegian income taxes, leaving you completely stranded with a massive debt to the state. Expats blindly accept a standard gross salary package while stacking up company-paid perks often find themselves in a terrifying scenario where their tax liabilities completely cannibalize their liquid cash flow. Protecting your executive wealth from this predatory tax trap requires highly sophisticated contract structuring known as Tax Equalization or a net salary agreement before your official accept the international assignment. Under a properly structured tax equalization policy, your employer legally commits to bearing the entire burden of the Norwegian Fringe Benefit taxes, ensuring that your negotiated net tax take home pay remains completely shielded from the Skatteetaten's aggressive assessments. At NLS Norway Relocation Group, we ensure that your executive compensation package is actually worth what it says on paper. We do not work for you through, we do the work for you through our vetted network of top-notch legal and tax advisors in Norway to meticulously audit your proposed relocation packages, aggressively negotiate tax equalized net salary agreements with your corporate headquarters, and legally optimize your fringe benefits so you never have to pay out of pocket for the perks you rightly earned. Do not let a misunderstood tax code turn your corporate rewards into a catastrophic financial liability. Protect your cash flow and ensure your executive transition is a true financial upgrade by visiting our website at nlsnorwayrelocation.no, nlsnorwayrelocation.no, to book a comprehensive strategy session today, and I will see you in the next episode.